first thing is I can definitely say data is the new oil. So even no Reliance, Mr. Mukesh Ambani, he even would acknowledge that because that is why he moved from petroleum to Reliance Geo now. So most of the things that currently we are doing and what we were doing earlier is completely different now because when I started trading, Warren Buffett was the only person. Like most of us, whoever started trading at the beginning stage, most of us would know definitely Warren Buffett. Everybody knows Warren Buffett. But the main thing with Warren Buffett was he'll always emphasize on reading about the balance sheets, looking into the company's business, like only invest in the company if you understood it. Definitely he's a successful investor, but it's completely all about fundamentals. So 10 to 20 years before, people were discussing all about balance sheets, fundamental analysis. But when I started trading in 2014, Jim Simons is one who completely changed my thought process. Jim Simons is also a famous, trader come investor who runs an hedge fund. But what differentiate Jim Simons from Warren Buffett is Jim Simons is the only person 30 years before who started giving importance to quant-based trading or investing. So he is basically a PhD in mathematics who was working with the National Security Agency in US. Like he was actually worked with intelligence, and then he quit his job and started focusing on markets in 1980s. So since 1980s, he is the only hedge fund guy. So he runs a hedge fund called Renaissance Technologies. So this hedge fund completely focused only on data driven. So when he started this hedge fund, he was able to collect 100, 200 years of Dow Jones and American historical data, and they were able to repeatedly search for patterns which can appear over a longer period of time. So they were basically looking for certain repeated patterns which can happen in large data sets, and finally they were able to create strategies out of it. So that is how Jim Simons started his hedge fund. And Renaissance Technologies hedge fund, the Medallion Fund, is one of the most performing top hedge funds in the world because they were able to give consistent positive returns year on year for the last 20, 30 years and with very least drawdown. And their trading duration no changes from few minutes, few seconds to just maximum 2 or 3 days. So Warren Buffett, who is basically a long-term investor, here Jim Simons, who is a short-term trader. So this guy gave a belief that okay, even trading money and making money in trading is also possible. Trading money in investing is also possible. We just have to follow the right rules so that no, it's not like only trading is good or only investing is good. Both are good if you follow the right approach.
True.
So then that is when all this data analysis, data analytics, and all the importance of giving to data started. So then I remember in 2018, I guess, yeah, in 2018, I could remember S Bank and DHFL. Both of this stock crashed more than 40% in one single day. I remember I was actually trading that day, and I could see in both all the news and all in channels, it was only DHFL and S Bank. And a stock like DHFL and S Bank crashing more than 40% in one single day is a huge thing. Because until then it was called as a fundamentally strong stock. But when it crashes more than 30 or 40% in one single day, like people started panicking. And more people, and since it was not a part of since it's a part of FNO stock, there was no circuit filter. So it started going down rapidly. By the end of the day, it almost crashed 40% and closed. So that day, what I did was instead of looking for reasons why it has fallen down or why this kind of crash happened, I immediately look out the past historical data sets. So what I did was I checked what are the list of stocks which has crashed more than 40% in one single day, and what happened to those stocks eventually 3 years or 5 years down the line. So if I could get this specific data analysis, then I'll have an idea what could happen to DHFL and SPAC. So that was the idea. So when I started searching for it, then 8 to 10 stocks came in my list. Stocks like Saturn Computers, Financial Technologies, Core Education. So these are the 10 to 12 stocks which came up in list which crashed more than 40% in one single day. Then I looked into a chart, what has happened to these stocks eventually. So after the crash, if you could see, after the crash, all these stocks started going down only. It couldn't go back to its previous high at all. So financial technology, core education, GTL. So all these stocks which crashed more than 40% eventually started trading as a penny stock.
Yeah.
So I was actually I'm very active in Quora where I have keep writing multiple articles and share multiple articles related to trading and investing. So I posted this content on the same day stating that this specific data analysis states that DHFL could also fall into the same trap. It can eventually get into a penny stock. So people who have all these followers who are following me on Quora, I told them it's better to avoid this stock because it's like catching a falling knife, so better to stay away from that stock. But obviously people add this belief or fundamental thing in their mind because it has a good loan book and all this fundamental part was there. But when big institutions and huge fund houses, they see some corporate governance issue, they'll immediately come out of it. As soon as they see a smoke, they'll come out of it. They don't really wait for the fire. But we
Yeah.
retail investors always wait for the news and then we validate it and then we try to come out of it. But by the time we realize that it is no bad, the damage would have been already too bad. So that is what actually happened with the DHFL. So eventually, both the DHFL and S Bank is completely down to a penny stock now. So this is one simple data analysis where I did not take much time, no coding, nothing is needed. All we have to do is find out what happened in the past and compare it with the current scenario. And there is a higher probability. There is not an 100% sure, but there is a higher probability that the similar thing could happen. So this is why data is really, really important when you come with rule-based trading. So with
Yeah.
past historical data analysis can help the retail investors to take a wise decision. So whether you are a new investor or an existing investor, if someone did this analysis, if he was holding a S bank or DHFL bank, I mean DHFL, you would have been out by 50% loss, but now it is 90% loss. So that is why it is not necessary to wait for the news. Instead, we can go and do all this data analysis and come up to a conclusion.
Okay. Yeah.
And the next thing is with regards to trading, why 95% of the traders don't know, I mean, fail or no, not able to make money in the markets is because most of them don't follow a trading strategy. Even I was like that when I started trading. So when a guy who moves from news-based to rule-based trading, that is the first part. Like if even if we ask all these traders who follow trading strategy, are they making profits? No, we can't say everyone is making profit because even though you have a trading strategy, you should have a discipline to stick to this trading strategy. So that discipline comes not based on what you're doing inside the market trading hours, what you do outside the market hours. So most people know, I would say, a guy who's a fitness freak or a guy who's going regularly going to a gym or not a guy who's going for a jogging or a cycling. If that guy is a regular fitness freak, he has a higher probability to become profitable in a trading journey because he is so disciplined outside his life. And that same discipline will come to the market also. So you can't be disciplined in market and after the market hours if you don't follow a strict discipline guidance, definitely it will not help. So what we are outside the market hours is what going to determine what you can be, whether be successful or not during the market hours. So why trading discipline is so hard? So those things we'll also cover in the coming slides. And finally, the position size. So trading strategy, discipline, and position size. These three are the most important part with respect to a rule-based trading. So I'll explain all this position sizing rules also. Because in position size, even though you have a trading strategy, even though you have a right discipline to follow the strategy, if you do not follow proper position sizing, like if you're risking too much, you're going to blow out. If you're risking very low, you're not going to make any reasonable returns. So we should know how much is too much, and accordingly we should position size our rules. So I'll
Very nice.
explain those.